and we thought it would be a really useful tool for somebody to figure out how much money they need to get. All right, hey, this is Scotty from the Gifford Group, and today I want to record a little video about our buying cost calculator, and that can be found on the Gifford Group. And if you go to our home resources and go to the home buyer guide and just scroll down a little bit, you'll see our home buyer guide, which is very useful if you're thinking about buying a home. We have our property tax calculator, which we have another video on that you can check out. And so today we'll be doing a video on buyer closing cost calculator to tell you how much money you do need to be bringing to closing to buy a home. So very useful calculator when you're considering purchasing a home. So the way this calculator is set up, I tried to make it pretty easy. So you can pick if you are going to be conventional, FHA, or VA. You can pick if you're going to be bringing, how much cash you're going to be bringing. You can pick it as a percentage. You can pick as an FHA, which starts at 3.5% down, and you can pick as a VA. So, and you can see all these numbers start adjusting right away. So what we're going to do is let's pick with a conventional. We're going to pick a percentage down, and you can buy with as little as 5% down on a conventional mortgage, which is nice. Thing to note, if you are doing 5%, you're doing less than 20% down, which you can purchase. A lot of people don't even know you can purchase a home without putting the full 20% down. You just will have PMI insurance over here. And so in this PMI calculation is going to vary based on how much the percentage you're putting down and your credit score. So a little bit of variable in that, but you can see, okay, so we put 5% down. Let's see, we're going to do a $400,000 home, and we're going to need, so that's going to tell us, hey, at 5%, we're going to need $20,000. Let's say we did 10% down. Okay, we're going to bring $40,000 down. We can see our loan to value 10% down. That's 90% loan to value. Our total loan amount will be $360,000. We can pick our interest rate. Let's pick a little bit under 7. Say maybe we can get that right now. If you're curious about interest rates, we have the current rates on our current mortgage rate calculator. And you can see that we need to bring about almost $14,000 to close here. And we, total cash at close is about $53,000, almost $54,000. So quite a bit of money than maybe you're expecting. Hey, I didn't realize it was going to be almost $14,000 for closing. So before I get into the closing cost, we'll look at the loan amount, and it says, okay, this is the total principal and interest. This is our monthly mortgage insurance, which is going to be based off the purchase price of the home. And we're doing about 0.68% of the purchase price. Our taxes here are based off right now it's 3%, but you can pick it and do a little bit less if you want. You can pick your mortgage, your tax rate here. In Texas, most neighborhoods run about 2.8, 2.6. But there's some neighborhoods that have less, and there's some neighborhoods that have more. So I made that an option that you can adjust your tax rate to, and as you adjust those, it'll adjust your monthly, tax payment. And let's see here. So then you get your total, which is your principal, interest, taxes, insurance, and then we're going to throw in your PMI, which then equals $3,700. And you can see that kind of falls close to the 1% rule of the payment, which is kind of a good guesstimate. Sometimes depending on interest rate and everything like that, but in your taxes and insurance. But say, okay, if a $360,000 loan, we can expect to pay about 1% of that, which in this case, hey, $3,700 a month. Now this number says, hey, of the percentage of the closing costs I'm paying as a percentage of the loan. So interesting to note that. Now this closing cost fees is editable. At least some of these are. And that's because, these fees are shoppable. So different title companies will charge different escrow fee. You can, if you're doing an appraisal, you can put that cost in there for you. If you have a survey, maybe your seller has a survey, you can, you don't need that. You can take that off. Recording fees, credit check fees, endorsement fees. And then we have buyer inspection fee, which is not normally part of closing cost. It's usually paid outside of closing, but maybe you want to include that to see how much total cash you need, and a home warranty, which is usually paid for by the seller, but maybe $600. Say, hey, like they're not paying for it, and I really want one to make sure that the appliances aren't going to die on me the day I move in. Further down, we have lender title policy for getting the loan origination, which is 1% of the loan. So, and then we upfront insurance. You got to usually pay for your full year insurance at closing at least. make sure your home is insured, because the mortgage company is not going to lend you this amount of money without having insurance in place in case some kind of fire happens or something like that. And then you're usually paying about 4 months of property taxes into an escrow account, so we included that, and some prepaid interest, which is based off of the loan amount and the interest rate. So that kind of gives us to our total closing costs there. Now we can see we're over $14,000. The other cool thing is, we'll go over the FHA a little bit here. FHA is 3.5% down, so you can see the down payment's a little less, and the loan value is a little more. One thing to note though is these closing costs. It does have upfront mortgage insurance that you have to pay to have an FHA loan, and you can see, look at what happened here. The total closing cost amount of the loan is actually higher than a conventional because of this upfront mortgage insurance here, and you got to prepay a little bit more interest normally. So interesting to note, even though you put less down, and maybe you're not bringing as much to close, your closing costs are higher. And then with VA, now you don't have, if you go over here and you're not putting 20% down, you don't have any private mortgage insurance like you do with a FHA or conventional, right? But the VA doesn't have that. But you do have, under the closing costs, you do have a VA funding fee. Now this VA funding fee over here, it kind of pops up when you pick the VA, says, hey, this funding fee is, if you're putting 5% down, it's this amount. So if you put okay, we're going to put 5% down. And so it adjusts, and you can see just 4.5, it's a lot higher than if you do 5%, because it's based off of these funding fees. And this is assuming the first time you're using your veteran benefits. So, but the funding fee is a big fee that does increase your closing cost. You can see if we only put down 0%, or, our loan value is obviously, our loan's obviously higher. So, but our closing costs are pretty high still too. And you can see that our, monthly mortgage payment's about $3,800. Where if we did say go back to the conventional and we did the, say 5%, which you can get a 5% down, you're about the same cost here, and the closing costs are a little lower. So it's just important to note that your total cost to get in the home is lower, and but there's just different ways to look at that, right? So as you're borrowing money. So like I said, we do have the mortgage we have the property tax calculator up above here. And if you are thinking about selling, we have our seller's net sheet as well, but I think hopefully you found this, this calculator helpful for you in determining how much your closing costs will be. If you are interested in applying for a loan, I'm a mortgage loan officer at My Mutual Mortgage, and we can obviously help you out there with all your mortgage needs. But I just wanted to buy this because we at the Gifford Group help with a lot of different buyers and different sellers, and we thought it would be a really useful tool for somebody to figure out how much money they need to get, to bring to close, at least have that expectation of what your costs are going to be walking into this home purchase. Because a lot of people think, well, I can't buy unless I got 20% down, or I can't, buy if, I only need just the down payment. So it is very useful to at least have some tools walking into this so you can have those expectations. And of course, if you have any questions along the way, don't be afraid to reach out to us. You can reach out to us at any time. And we also you can schedule a call with us. If you go to the contact us, you can check out our Calendarly and schedule a call with us to speak with us about, buying a home. So just, hopefully you found this video helpful, and I hope you like and subscribe to this video, or more videos like this, and thanks so much for watching.